What's up, traders? Welcome to the Day Trading Show. So today we're talking about how to get funded in 2023. We share some really important tips that are going to help you move through the process as smoothly as possible. We talk about what firms you should trust, how to find the firms that you shouldn't trust, and everything in between. So sit back and enjoy. I know you're going to love this episode. All right, boys, we're back. How to get funded in 2023. That's the topic of today's show. So why not start by going around and, like James just said, I'm stealing this from you, bro. Let's each mention our favorite funding company, and then we'll go into why throughout the episode. We'll also talk about some instant red flags that I think you guys as listeners should be aware of. You have three people here who have a lot of experience with different funding companies, not only with our own trading, but just being in the positions that we're in on social media. We talk to a lot of traders. We hear a lot of stories, right, boys? So we definitely can give some good insight, I think, on, why you should get funded and how you can go about that process properly, because there's definitely a proper way to do it. So let's go around, boys. Tom, you want to kick it off? Top funding company, if you had to pick one for 2023.
So for me, I think just because I've got the most experience with them and looking at their stats and comparing them against all the others still, I still think MFF are up there in terms of the rules, the payouts, the scaling. So yeah, I'm gonna say MFF.
Okay.
For now.
Fair answer. James?
Yeah, I'll go three top ones, but I'll pick the top one out of the three. FTMO. I'll go three top ones, but I'll pick the top one out of the three.
I love that.
FTMO.
This is why it's good that we don't script these questions, and I throw curveballs for you, because come on, how could you plan that answer? Like, that's so funny, bro. You're hilarious. All right, go ahead.
But I'll go with FTMO,
Okay.
just for their reliability. They've been around since 2015, and yeah, I've been with them for a while, and yeah, I've never had any issues with them. Always great customer support, and yeah.
Cool. And I love both of those firms. I think that they're both doing a really good job right now. Now, this is being filmed, we should say, January of 2023. In the future, if things come out and change, of course, our opinions are open to changing. But I'll throw in for Surge Traders, since that's the next firm that I'm going to be getting funded with this year. So, and I've done, James and I had a video with Corey from Surge, and we have another video coming with them. I think that they offer a really interesting option for US traders specifically. We'll talk about regulation in today's episode for sure, but also in their challenge, where it's only a one-phase challenge. And I think that is going to be another big point of conversation today. So good. We gave everybody at least three firms to go do some research into that we have, had experience with. Now, before we go into some of my questions, boys, are there firms that we should say, like, do we want to come on here and maybe say, stay away from? Have we heard anything bad? Now, of course, we don't want to badmouth anybody, but do you guys have any stories of a firm that is a definite no-no? It's okay if you don't.
I personally don't.
Okay.
Obviously, I've only known one. I think everybody's always concerned about firms going down or going under or rug pulling, whatever you want to call it. But I've only ever heard of one firm doing that, and that was, what was that firm's name again? Funding Talent.
Yeah. I always forget about them.
Yeah, so that's the only one that's gone down out of all the firms.
Well, there was also the firm, I think a few weeks ago in Australia, I think the prop trading. I think they
I did hear.
I saw that
but
on
I think
Twitter.
I don't know if they went down under or they were just having problems with some financial regulation.
Sure.
But I don't know. But maybe if they come back up, I mean, then they haven't gone under yet. I mean, people haven't said, So maybe but personally, I haven't had any, I can't say stay away from any firm. I think do your own research. I can only vouch for firms. I'm not going to vouch against firms. I don't have any experience in that.
No, that's okay. Tom, do you have anything you want to add?
Yeah, so I've got nothing against any of these firms. I think when I do see people moan about firms, it's because 90% of the time, they've not done their own due diligence.
Facts.
And their rules are there for them to see. Probably an issue with the prop firms is they do like to hide these away in some very sneaky places that are not easily accessible, but I'm sure we'll come on to that. But no, for me, I'm not going to badmouth any prop firm.
You're a smart man, Tom. You're a smart man and an articulate man. The use of the word moan in the start of that answer was just spot on, bro. So listen, now that with all jokes aside, we've kind of given some framework on what companies we're going to be speaking about from experience with us being funded with them, but also with some of the guys that we work with in the Black Shirt Club. So one of the things that the three of us have really been focused on is growing the Black Shirt Club in a direction that's helping people get funded. We do have open availability for anybody listening. If you're interested in joining the Black Shirt Club, you can go to our website, go to asfx.biz/BSC. You can book a free call with me. We can hop on, see if it would be a good fit, because there is a pretty intense workload and time commitment required. But we're really pushing people in a direction of helping them get funded. Tom is a byproduct of the Black Shirt Club, and now he's become a coach with us. He was able to get funded in the program. Liam is one of the guys that we just had on the podcast. He was, like we said in his episode, able to get funded through working with the Black Shirt Club. So now that we've kind of put the firms out there that we're talking about, know that we also have experience helping people get funded as well. So if that interests you, like I said, book a call and we can see if that'd be a good fit. For the conversation today about, knowing if companies are legit or not, I think that's probably a good place for us to start. So you both mentioned doing your own due diligence, doing your own research, and double checking the rules and the regulations that go along with these firms. So let's start high level. Are there certain certificates, or is there anything that you guys know, if I see this, they're verified by this, or if they're regulated by this, that I would trust them? How do you guys go about saying, oh, this is a trustworthy firm? Tom, you want to go first?
So being completely and open and honest, when I first got funded,
lie to us, Tom. Lie to us.
Yeah, I'm just here. I'm just going to lie and bullshit all my way through this entire podcast. I probably didn't do enough due diligence, holding my hands up, and I think we probably at times all take it for granted that these companies should be trustworthy, but we've only have to look at what's happened at FTX at the back end of last year to know that nothing's truly safe anywhere. I know that obviously it's cryptocurrency, it's not regulated, etc., but are these prop firms regulated by the financial authorities and the FCA in the UK and things like that? And I think now are being made aware of some of these issues, and we are having to dig a little bit deeper. But again, it's sometimes not as easy as just going on a website and looking at a Trustpilot review and things like that, because I'm sure there were plenty out there for FTX that says this is a great exchange.
100%. 100%.
So I think it is very difficult. You are going to have to start going into the background. Who owns the companies? Where are they based? And again, these are big companies now. They are going to be in places where there are tax benefits, because at the end of the day, they're an operating business. And if they can save 10% or 20%, 30% on their money,
right,
we'd all be doing exactly the same. So I do think it's getting harder to verify things, but we should be doing as much as we can. I think for me, it's just experience and knowing other people that have been paid out, knowing that they're reliable. It's like FTMO. The amount of payouts that we see from James month after month that helps build that trust. And I think trust's one of the biggest things that prop firms are going to have to make in 2023 to succeed.
James, you want to add on to that?
Yeah, I think, as Tom said, it is getting quite tough, because you do get, it's just the nature of humans, right? They'll like to make money, even if that means scamming people, unfortunately, like FTX and that. So, obviously, with prop firms, there's so many coming out right now. I think just for the mere fact that when I decided to go with FTMO first, I knew that other traders inside in Twitter and inside the trading community had been paid out so many times by them, and that gave me the confidence to go with them. And then obviously with other firms like MFF, the Funded Trader, Surge Trader, whatever firm you decide to go with, just getting background checks on them to be like, okay, cool, have you been paid by them? And you can verify maybe 5 other traders, maybe on Twitter or whatever, that have been paid by them. And for large sums of money, like 5 figures plus, then you know that, okay, cool. If you don't have a problem getting paid out 5 figures, you probably are going to get paid out. But then also just making sure that they have been around for a little bit. That's why I love FTMO, because they have been around since 2015. The thing with me is, like, if something's going to get found out, it's probably going to get found out in the first 2 to 3 years. I mean, FTX, took 3 years for them to get found out. So FTMO has been around for a long time now, and they haven't gone anywhere. They're only getting bigger and better. So I think these prop firms are only going to get bigger and better. Just be wary of who you decide to go with.
So that's a great answer to add on to Tom. Were you going to say something, Tom?
Yeah, I was going to say, what's your opinion on these companies, and how are you verifying whether they're legit? Is there any process that you go through?
Well, I look on Twitter first. I like to see what people are saying on Twitter. That's like a news source to me. So I'll go on Twitter and see when you search the hashtag of some of these companies' names, what are people saying? So I think that's a good way to tap in with what's going on. But you guys both brought up really good points about how to like weed through. I think that there's also, and this is the direction I wanted to go with the conversation, there's like certain rules that to me clearly show which companies are more legit, meaning they're actually giving you live money most likely because of the rules they have in place, versus some of these companies where the rules are very lackadaisical. And I remember when I got into trading, I was able to trade with Traders Way, I think was the Trading Way, was the broker's name, 3,000 to 1 leverage. Completely outrageous. So there's been in situations with brokerages, people that will give you crazy leverage. So of course there's going to be people in the prop and funding business that give you crazy rules. But that broker is way less legitimate than for example, a US regulated or a UK regulated broker. So you're always going to have the spectrum. I think you have to understand where you are within that spectrum,
Yeah.
Yeah. So let me, sorry. I want to go in the direction of, deeper down this like instant red flags rabbit hole, because we even posted in the Discord chat asking everybody, what are some of the red flags that would turn you off from a company? So first one I think we should talk about is lack of payout proof. Now, like I said, you can always go to Twitter and tap in and see what people are saying there. But when you guys, James, I mean, maybe you should speak first on this. When you went with FTMO, why did you choose FTMO? Were you seeing payout proof? Was that one of the reasons?
Yeah, so just as same as what you do on Twitter, I had a look there and I saw a lot of people getting paid out by FTMO. No one ever said, "Oh, I should have been paid out and I didn't get paid out." Like I've never seen, just never seen that. Like everybody was always like thanking FTMO for having their business open and for traders to change the retail trading game. So that's why I really liked it. I always saw positive reviews and everybody was getting paid out that I saw on Twitter.
And then Tom, you with My Forex Funds, I'm sure were in their Discord where they were showing a ton of people in their chat supposedly getting paid out, right?
Yeah, you are, especially on the social media side, au fait to which ones are showing who's paying out, and which I think does help. But again, I think for me, it was just some of the rules. It's a little bit easier, and I'm hold my hands up. That was one of the reasons why I was with them, because they looked more appealing on paper. Yeah, with some of their rules. So I think that was the reason for choosing them, but I don't think they were as established as FTMO at the time.
Yeah, I would agree with that.
Yeah.
Yeah. And I think I'm probably in the same boat as you, where like when I talk to some of the new guys, especially going back into last year, before I was talking to other companies and seeing what else was out there, like between My Forex Funds and FTMO, My Forex Funds has a smaller threshold. So why would you not try that? I think that this should then stem into the part of the conversation that I mentioned earlier, which is the rules and how easy they make it to get past the challenge versus the rules with some of these companies that it's just set up differently where it is a little bit more restrictive. Specifically, let's talk about drawdown first. I mean, let's just be honest, guys. Like if you see two companies where one is offering 5% drawdown max and one is offering 12% drawdown max, what would that tell you? You know what I mean? Like that to me, there's a very big difference there. So what does it mean? What does that mean to you, Tom?
For me, the bigger drawdown is, from my personal perspective, way more appealing. Because let's be honest, is a 12% drawdown huge? Absolutely not. The S&P 500 can be down more than 12% in a year. If we're talking about big drawdowns, I'm talking 50, 60, 70%. We've seen stocks lose 80% over the last year. 12% is a tiny drawdown. If you can show me a professional trader in the Market Wizards book that's not had a drawdown of 12%, then fair enough. But at some point in our careers, a 12% drawdown will probably be reached by all of us if we're trading long enough.
Oh, for sure. For sure. So do you think 5% is too tight?
it all depends on your risk manager. If you're risking 0.1%, then maybe not. But it's all relative to your trading strategy.
Of course.
At the end of
like
the day.
in your own opinion, like would you, for the way that you like to trade, would you be interested in trying to get funded with a firm that limits your drawdown to 5%, which then therefore, like you just said, limits your position sizing?
So the way I see it at the minute is, and I'm doing a lot of research into all of these funds for this reason, I'm here to make money at the end of the day. And if I can trade, once I've passed the funding challenge, we'll talk about the challenge element of it. But once you are funded, if I've got somebody that's offering me a 12% drawdown versus a 5% drawdown, I can size roughly 2.5 times bigger.
Sure.
And make 2.5 times more money with the same account size with a bigger drawdown.
Yeah, that is very
so for me, that becomes a lot more appealing. And I'm not saying that we're going to be risking and pushing our limits to that 12%.
No, of course.
We want to be getting
more.
Half of that maybe, right. But it's still going to be 2.5 times bigger than the 5%.
So,
and at the end of the day, I can take that cash out, put it into my own account, which is the goal.
Yeah.
We want to be building our own capital.
Of course. But in the process of building your own capital, doesn't it? And I think it's good that you and I don't see eye to eye on this. The audience will appreciate that. So is it unsettling to you though, that there, like, again, and I'm funded with my Forex funds that allows this 12% drawdown. Do you think that shows in any way that maybe they aren't having you trade live money? Or do you think that doesn't matter?
I don't care. As long as they pay out when they say they would.
This is the bigger point, right?
So their business model is their concern. My business with them is that they pay me when I make profits. That's the relationship, really.
Yeah. I would agree with that. So I was going to say, with the 5% compared to the 12%, I know, like, on the back end, you're going to be like, well, if they're giving you 5% drawdown, maybe they're making you trade real money. But as Tom was saying, like, it doesn't really, like, for me, it doesn't really matter. It's fair. If I'm making money and they're paying me out, it's the same thing. One's just giving me 12%, other one's giving me 5%. But I also think it's the different thing, because remember that with the 12% drawdown, the challenge time had time limit compared to the 5%. Normal in the prop funding company game, the 5%, the companies with 5% give you unlimited time to pass it. So it's a different. You got to wait it. Okay, are you going to do an 8% in 2 months with my Forex funds for phase one? Or are you going to do 5%, 10% with no time limit? So yeah.
What do you guys think? Go ahead, Tom.
So you say that we don't see eye to eye. So
I mean, I agree.
What with this?
I guess I was under.
Do you disagree with then, and why?
Yeah, I guess I was under the impression that more drawdown meant potential illegitimacy. But you raised good points that prove me wrong. I'm definitely willing to say, like, I would say it's not that I'm incorrect, but my idea doesn't necessarily lead to the conclusion that I'm making. You know what I'm saying?
Right.
The conclusion could still be correct, but the idea might have nothing to do with it, because you make a good point. Because 12% drawdown is very reasonable overall. So what do you think then about and just really, because this is kind of like a side point to this, the length of time that the firm has been in business? Because James, you mentioned that already. So with drawdown being a factor in more like your personal trading style and how much money you can make, putting aside their business model, like you said, Tom, does time open mean something as well, as far as like legitimacy versus not legitimacy? Or no, not really? Because I get James's point of like 3 years, but like we've seen companies that have been around for 10 years go bust, right? So like, does time in business really matter?
Personally, I think so, because I mean, obviously you're going to have companies, you're going to have the odd company after 10 years that will go bust. That's the nature of business. Businesses go bankrupt on an everyday basis around the world. Right. But I just think that time in business does give the more reliability, because at the end of the day, like, FTMO has been around for a long time. I'm pretty sure they've got investors that have invested into their proprietary trading firm that are trading capital, and they're copying the trades across. But whether they are or not, it doesn't really faze me. But what I'm saying is, as Tom's also pointed in the past, like, they basically, what I think funding companies are doing is they're using the traders' data that trades on their platform to pass on to external sources. They're selling your data basically off to external sources, either copying your trades and then also just selling your data. Okay, this many traders are long Euro USD or short Euro USD, for example, on our platform. And they can take that data and sell it.
Interesting.
So for me to answer that question, I think, does time in business count? I think it absolutely does, but I do think that just because you've been in business for a long time doesn't mean to say necessarily that you are good at the time, because at some point there is always going to be a disruptor to the market. Yeah. And if you don't adapt in business and push, you become stagnant in the market. So just because somebody's been around for a long time, it doesn't mean to say somebody's not going to come in with a better offer. And I think some of these newer firms coming in are trying to challenge the FTMOs and your MFFs with some of their offers and the way that they're working with these unlimited time frames to pass challenges, etc. So unless FTMO and MFF don't adapt, they could get left behind, because at some point these offers are going to become more attractive. Even though the companies are newer, people will be willing to take a chance. And let's be honest, we're all risk takers in the job that we're actually doing by being a trader in the first place. Yes, we might be risk averse when we're taking trades, but actually when you think of it as a whole, being a trader, a full-time trader in itself, is risky. So we're all open to taking a risk now and again. And if a new company comes along with a far better offer, we'd all be willing to take it if it meant that it put more money in our pockets and it was easier.
100%.
Well said. I was going to say as well, like, these funding companies that are coming up, and I'm so glad that Tom and Austin got on board with the funding, specifically Austin, because I know Austin, it can be a little bit skeptical, but it's only.
I thought you were going to call me stubborn, bro. I was like, come on, don't go there, Baldy. Don't go there.
But just being like, I think it's just giving us more leverage as retail traders. As I said, and as Tom said, all these companies are going to try and compete against each other to try and get more traders to go with them, because
they want the business. Yeah,
they want the business, and then that's just, and by them making their rules more attractive to us retail traders, it puts the ball in our court. And I think if you're not going with funding companies in 2023, you're just being stubborn.
Bro, I talked to a guy yesterday that has been trading for a few years, similar to some of our Black Shirt Club guys that have been trading for a few years and were not successful, and that was why they joined. This guy was a potential lead. He'll probably be listening to this because he listens to the podcast. And it was just very clear to me how some people are very skeptical of getting funded. And I can relate to it, like you said, because I was skeptical for a while. But once I talked to him for 10 or 15 minutes, he finally was like, I could tell he was like, I'm ready. I'm doing this. Like, he was very motivated and he wanted to make it happen. So I think when you really explain it to people, like Tom said, this is the business model, and I don't care really what's going on other than as long as I'm getting paid. Like, that's not my problem. It's ignorance is bliss is a way. What does that look like for us in 15 years? I have no idea. You know what I'm saying? I'm worried about next week. Let's keep winning trades next week. And when things change, we'll adapt. It's what we did to get this far. You know what I'm saying? Is adapt. It's stay flexible, try new things, be willing to be wrong. That's what brought us here, So with the funding companies change and a new super appealing one comes out, cool. Like Tom said, let's go. Why would we not? We're trying to make money. That's it. That's
agreed.
It.
And I think as traders, I think now, just sitting down and having a conversation with you guys, I think for us to be worried about, are these companies going to go under? I think it's completely stupid to think in that way, because as we've already seen, if one goes under, there's going to be 5 more that come up. There's always going to be an option for us.
I like your perspective, bro. Your perspective is
good.
Would you agree with it, Tom, or no?
Yes and no. I think one firm, if you're with one firm, and that goes bust, then all of a sudden, if you've not got other ways of funding your trading business, so whether that's your own private capital or your private investors or another prop firm, all of a sudden you're left with no way to make money. So I think it's important to have other options available to trade and diversify should one of these firms go bust. And obviously, James, like you say, you've got funding with a couple of prop firms, you've got your own personal account, and you've got some private investors. So if one of these firms was to go bust,
James,
you can still come to work tomorrow and make a living.
Right.
So I think that is, for me, definitely a potential risk to their own personal trading businesses.
Yeah. Let me take a pivot in the conversation here. What do you guys think about the potential for more regulation in this business? Do we think more regulation is coming to the prop firm space? Do we think? Yeah. But I mean, prop firms have been around, especially in the States, for a long time. So it's like there's already some regulation in place, but are these companies even all falling under what prop firms have to fall under? Like you said, Tom, because they're based in other countries, that's different. If you're, again, the way they word them, maybe they're not prop firms, they're funding companies. It's very gray, the whole area, isn't it?
Yeah, and I think it all depends on what they class themselves as. Are they, because a lot of these are saying they're not brokers, so they don't need to be regulated by the Financial Conduct Authority because they're not a broker.
Right.
They're a proprietary trading firm, so they use their own capital, so they don't need to be, because they're basically using their capital, and we just trade their capital on behalf of them. Do I think there is more regulation coming? I think there probably will do, and I think the more noise people make about firms ripping them off or scams becoming apparent,
the more likely
the
it is that they're going to crack down.
Step in.
Yep. Good point.
You? What's your thoughts?
I think it's probably coming. What does it look like? I don't know. They've been talking about regulating crypto for a long time, but in reality, crypto is pretty regulated already. So I think the mainstream has a clouded image of what actually is going on sometimes. So could it happen? For sure. Would it affect us? Probably not instantly, and it would be something that we could adapt to, you would think. But I think it goes back to your previous point. This is why I brought it up right now, because if you're funded with two companies, say one based in somewhere in Europe and then one based in the States, chances are they're both not going down at the same time. That's a much higher probability of that not happening than the probability of you just being with one and the one going down. There's a statistical odd for that, but the odd of two of them going down based in different countries at the same time, that's a much smaller odd. So I think you just want to narrow yourself down that funnel of probabilities to where you're safe enough, but I do think there is a point where, and we don't talk about this a lot, but then once you get to the point, for example, James, I know you just started with some new firm because you had a challenge with them that you're now trying to add to the capital that you have. At what point do you stop adding capital and you just trade what you have and you work on building, or do you never stop trying to add capital? James, you go first.
I think maybe I personally don't think I'd ever stop adding capital, but there will be stages where maybe I'm like, okay, cool. Maybe this for 6 months I'll just focus on growing my personal account, and only trading my personal account and private investor.
Sure.
But I don't think as long as these funding companies are around, I don't think I'll ever stop looking to add capital and looking to max out with 3 or 4 firms.
And you're using a trade copier to make that happen, right? Because people always want to know. Can you direct them really quick? Just give them a good free resource for that.
Yeah, so I'm using Forex Copier 3.
Not sponsored.
No, not sponsored. Yeah, definitely not sponsored. Forex Copier 3, it's a one-time payment. And just type in Forex Copier 3. That's cool. What it comes up as.
Tom, you want to add to that?
Yeah, so I also use Forex Copier 3. But what, just remind me of the original question?
Well, I guess, we're talking about being diversified and if you'll ever stop getting capital.
That was it, yeah.
Yeah.
So I think we all have a goal in mind of where we would like to be as a minimum. I think there will obviously come a point where I think enough is enough.
Yeah.
Because I don't want to be putting in billions and billions, but I'd certainly like to.
Why not?
Because I don't know whether that gives me the life that I actually want to lead when you've got that much
right.
that much money.
I get what you're saying, because at some
So,
point, if you're like James, if you continue to collect money from private investors and get more prop firm money,
you'd have to be regulated yourself. Yeah.
Eventually, you would have to have. I mean, like, especially if you're collecting
Licensing
money
and-
from other people, you do have to regulate that. I'm pretty sure.
Yeah,
So
licensing and everything. Sure.
right.
at some
But
point, the
but if you
headache
do,
is going to be there.
if you do what Tom is saying and you take the money from the funded companies like, for example, I take a lot of it in crypto. If you didn't take it in crypto and you just held it in cash and built up your own money, yeah, you will pay tax on the payout from the funded company, but then there's a way to go around that a little bit, because if you have a business, you can write off the tax or write off your income and then pay lower tax. So like you can kind of go around even paying the tax on that if you have a good accountant and you have good expenses and the right stuff set up. So there's all of that. But I think in that like place of taking money from the prop firm and then using it to build up your own capital, you eventually don't even really need, unless you want to, which I always say I think I will, you wouldn't need to go and get money from other people. You wouldn't need to go get regulated. You just trade your own account, you know?
Yeah. I think out there with the opportunities that are out there as of January 2023 and having this podcast, I think it's there's 7 figures of funding out there for everybody listening to this podcast. Agreed. Everybody has got the ability to get 7 figures under their management.
Right.
And that can be enough to change your life and put you somewhere where you can look after your family and your future. So that opportunity is absolutely out there. Can you scale well beyond that? Yeah, of course you can. You can easily get to 8 or 9 figures, I think, in this if you dedicate yourself to it for long enough. And you've got a track record. If you can make 30% in a market year after year, people will be throwing money at you hand over fist. So getting hold of capital's it's the easy part if you can trade.
I agree.
And
it's always education. Yeah. And I think that's probably the reason why people in the Black Shirt Club have seen success when they've gone down the path of trying to get funded while they're in the club. Some of them are still working on their challenges, but they're moving in a positive direction. I think we've not had anybody that I know of, tell me if I'm wrong, anybody in the Black Shirt Club blow a funded account and not get a free retry. All of my guys that did not pass the first time they did it in the BSC got a free retry. They were in profit. Have you guys had anybody blow it and then not get a free retry?
I've Steve, but I think he got funded and then he blew the funded account. So I don't know if that counts.
No, that's not really what I'm saying, but that does suck. But we love Steve anyway.
Yeah, I don't think I've had anyone that's just gone full tilt and
that's what I'm saying.
No.
There you go. The education pays off. To your point, Tom. It's like if you learn how to trade, even when you're trying to get funded, it won't cost you a ton of money because you're going to be able to probably end in profit most months and then, be able to get the free retry and take another try at it. I mean, I think people have to probably have realistic expectations when it comes to getting funded too. Like, it's okay to fail a funding challenge. I don't think a lot of people will say that, but I think all of us would tell you it is definitely okay to fail. We don't want to, of course. You don't want to pay them more money, but it's going to happen. I mean, if you're not failing, are you really trying your hardest?
I actually did a video about this on my YouTube channel, and I'm going to plug it on this podcast for you to all go and check it out, because I use the FTMO equity simulator to prove this very, very point that Austin's talking about. And you can make between 2 and 4% trading every month for a year and make between 30 and 60%, which we would all be very, very, very happy with, and still never pass a funding challenge. And I use just basic maths to show you the probabilities of passing challenges in a 30-day period with a very profitable strategy.
That's crazy.
And even with something, I think it was something like a 60 or 70% win rate with a 1.5 risk reward, you would still fail roughly 40% of the time.
That's crazy.
And you would make a fortune over the long term, but you would fail around 40% of the time because of taking a trade a day, the variance involved.
Right. No, I mean, that's a great example of what I'm saying, because I think a lot of people come in and they think if I can't pass a funding challenge, then I'm not a good trader. I've seen people fail with one company, go to a different company with different rules, and they pass, and then they're funded and they stay funded for a long time. So I think it's about finding, just like finding a trading strategy has to align with your beliefs, finding a funding company that aligns with rules and things like that work with you is very important. Let's turn to this because I want to make sure we talk about this. What about different assets, right? Like some of these firms are not offering stocks. Some offer stocks. Some are offering crypto. Some are not offering crypto. How much of a factor does that play into the firms that you guys are looking to get funded with? Like in 2023, are you going to only consider firms that offer everything? Does it not matter because you only want to be trading a few assets?
It's huge for me. You should know everything about your strategy and whether you can trade in that way. So I, again, went with a firm before I'd even sort of found anything around my Forex fund or any of the other ones. And I predominantly day trade on the 15-minute and 5-minute time frame. And I went with this firm and you could only swing trade on it. So I was like, well, this is not going to work for me. I'll close it down. And we never took off. So I didn't do my due diligence in that instance. But I think you have to make sure that you can trade the assets, the position size, the time. If you're a news trader or you hold over the weekend, some of these firms don't let you do that. So there's so many of these rules that you do need to look down and compare. Right, can I trade how I am at the minute with my strategy with these firms? Right. But sometimes they don't make that as easy as it probably should be to get your hands on.
You're right.
I think you should be looking at that as an absolute minimum.
Yeah. I mean, I had the issue with my Forex funds. Like I didn't understand why I couldn't combine the two accounts until I got the one payout on both accounts. Like, again, stupid little nuanced rules that they have that you should really know about before you ever even jump in. So not only paying attention to what assets do they offer, right? Or what type of trading do they allow you to do? Like Tom said, you should really know all of them. And I think, you know what would be a good website to start? Like a comparison website that like listed all of the companies. You would like that, Tom. You built a little spreadsheet for it.
Yeah, I would.
Compared them and had them on the top. Like I'm seeing it now. I can see the spreadsheet now. No, that's very well said, Tom. So listen, boys, I think we can probably pause here because this conversation could extend for a long time. Hopefully that.
So come on, I'm gonna give us we've got one answer each, and we can use this to roll into that next episode you're talking about.
Okay, go ahead.
I want your best tip to help people get funded in 2023. Is it a firm? Is it the strategy? Is it mentorship? What is your one tip to help increase the probabilities of success of getting funded?
Well, I think you have to get around people that have been funded. I had James, who had experience with FTMO. I got to speak with him and see him trade and see him do well, what was working well. For example, like watching him take profits aggressively, stacking small wins. That translated into the way that I'm trading now. That's been working really well for me for the last 6 months, like really well. Markets are down and I'm crushing it. So I think it's get around people that are funded already and take from them as much as you can. You don't have to join the Black Shirt Club. Of course, we would love for some people that are listening this far into our episodes to join. And I want you guys to book a call if you're interested on our website, but just go get around people that are funded. Follow them on Twitter. Don't follow CNN and all this other stuff that's junking up your timeline. Follow guys that are actually funded, sharing really good information about the process and the trades that they're taking, the way that they're managing their trades, the type of market that they think we're in, all of that. Just listen to people that are doing what you want. That's what we do. So.
Great answer. James?
Thanks.
Sure. My answer will be, and that's good answer there, Austin. I would say adaptability. I think that a lot of people don't realize, or traders, don't realize that for each phase, it requires a different version of trader that you have to be. For phase one, you need to be more aggressive. You got, if you're going with like a firm like my Forex funds, you got to make 8% in 2 months, essentially, because they do give that extension. But you got to be a little bit more aggressive. And then phase two, you got to make 5% in 2 months, which requires a different version of yourself as a trader. And then once you're funded, you essentially have no profit target, and you can be making 1% per month and getting paid out every single month or every 2 weeks. With some firms, they allow you bi-weekly payments, payouts. So I think just adaptability and knowing what phase you're in requires you to be a different version of yourself as a trader.
That's a good answer.
Yeah, good answer as well.
Yeah, really good answer. All right. I'm wrapping it here then, Tom. I appreciate you throwing that last question in there. I'm sure everybody loved that. Listen, if you're watching, listening, make sure you subscribe, drop a review. You know what we need. Keep the comments and the thumbs ups and the shares. Keep it all coming. We appreciate it very, very much. If you're watching or listening and you share it on Instagram, we'll repost you. Come on, you know what we do. So yeah, boys, great stuff. Listeners, thank you very much. We'll see you guys in the next episode.